Okay, let's have donor's tax. So a donor's tax, it is imposed on a donation between living persons or those who are to take effect during the lifetime of the donor, or otherwise called donation inter vivos. Because a donation mortis causa, or a donation that takes effect upon the death of the donor, is subject to estate tax, not donor's tax. So for purposes of donor's tax, the donation referred to is donation inter vivos. So a donor's tax is a tax on the privilege of transmitting one's property or property rights to another without adequate and full valuable consideration. As such, a donor's tax is an excise tax or a tax on a privilege. It is a tax on the privilege of the donor to give or to transfer his property by way of a gift inter vivos. As such, a donor's tax is not a property tax because it is not imposed on the property but on the right of the donor to transfer his property. That is why it is an excise tax, not a property tax. And very important, the law in force at the time of the perfection of the donation shall govern the imposition of the donor's tax. So even if we have a new uh, law on donor's tax because of the train law, okay, but if a donation happened a long time ago, then you have to refer on that the law at in force at the time of that donation to determine the imposition of the donor's tax. Okay, so it is the law in force at the time of donation that shall govern the uh, provision pertaining to donation. On campaign contribution, the tax code provides that it will be subject to our election laws. So under our election laws, campaign contributions are exempted from donor's tax. However, you should take note that only those that have been spent utilized during the campaign period set by the COMELEC are exempt from donor's tax. So after the campaign period or before the campaign period, those contributions are taxable as a donation. Okay. It is also required that only those contribution which were reported by the politician to the COMELEC at the time he is required to submit the expenses he incurred during the election. So only those campaign contribution included in that report of expenses will be um, exempted from donor's tax. All other donations, campaign contributions not covered by that, or those donation before or after campaign period shall be subject to donor's tax. Okay, cancellation of debt, indebtedness, or cancellation of debt. The question here is whether or not when the creditor condone, forgives, cancels the debt or the indebtedness of a debtor, will it be tantamount to, or will it be considered donation subject to donor's tax? So it will depend. If for example the individual has performed services for the creditor, and because of that services rendered, the creditor cancels the debt or the indebtedness of the debtor, then it becomes an income of the debtor. It is like a compensation for his services, and therefore the debtor should declare that as income subject to income tax on the part of the debtor. Also, if the creditor condones the debt of a debtor, and after the condonation, the debtor remains insolvent, then such donation shall not be subject to income or donor's tax because there is no benefit on the part of the debtor. So what is that cancellation of indebtedness that may be subjected to donor's tax? It is this. If a creditor merely desires to benefit a debtor and without any consideration therefore cancels the debt, the amount of the debt is a gift from the creditor to the debtor. So that therefore it will be subjected to donor's tax. You have to remember that in donor's tax, donative intent, the intent to donate is very important. Whether cancellation or indebtedness or pure gift given by the donor, donative intent or the intention to donate must be present to be subject to donor's tax. Renunciation of inheritance. The scenario here is that someone died and you are an heir. Then you do not want to inherit from the decedent. Will it tantamount to donation to the other? Are you donating your share to the other heirs? And because of that, will it be subjected to donor's tax? So it depends also. If the renunciation is general, meaning you just, as an heir, you just renounce your share without waiving it in favor of another heir, then the general renunciation is not subject to donor's tax. Okay, because it is as if you received nothing and you did not give anything to anyone. So no donor's tax. But if the renunciation is special, meaning it is renounced in favor of another heir, then it will be subjected to donor's tax because you are actually receiving your share in the inheritance, but you give it to another heir through special renunciation, and therefore that is a gift and subject to donor's tax. Okay, because general renunciation is refusal to receive inheritance or hereditary estate in favor of no specifically identified heir, while a special renunciation is a refusal to receive inheritance or hereditary estate specifically and categorically done in favor of identified heir or heirs to the exclusion or disadvantage of the other co-heirs in the hereditary estate. So, how about the renunciation of the surviving spouse of the share in the conjugal partnership or absolute community? Okay, so let us say, for example, a spouse died and the property relationship of the spouses during the lifetime of the decedent may either be conjugal partnership of gains or absolute community property. And therefore, in the estate of the decedent, there will be included therein properties which may either be a conjugal property or a community property. Then the share of the surviving spouse therein may also be renounced by a surviving spouse. Of course, the surviving spouse can also not renounce it. So if it will not be renounced by the surviving spouse, then there will be no donation. But how about if it is renounced? Okay, the law says the renunciation of the surviving spouse of his or her share in the conjugal partnership or absolute community, whether general or special renunciation, after the dissolution of marriage in favor of the heirs of the deceased spouse or any other person is subject to donor's tax. Why? Because in the first place, that share is actually owned by the surviving spouse and now he is renouncing it, giving it to the other heirs, and therefore he is giving a gift and it will be subjected to donor's tax. This one, transfer for less than adequate and full consideration. Meaning you transfer a property for a consideration, but the consideration is not adequate to cover the full amount of the value transferred. So the question now is whether or not the difference between the actual value of the property transferred and the inadequate consideration. Will the difference will it mean that the transferor is donating the remaining portion to the transferee? So if this is an indirect donation where donative intent is not necessary, then the excess of the fair market value over the consideration is deemed a gift and is subject to donor's tax. So there is no donative intent necessary here, class. What is considered is that if the fair market value is more than the consideration given by the transferee, then that's the difference is deemed a gift subject to donor's tax. Okay, but this will not apply to real properties classified as capital assets because we have discussed earlier or before that real properties classified as capital assets is subject to capital gains tax on their gross selling price or fair market value, whichever is higher. So there is no need to look whether there was adequate or full consideration because the tax base for real properties which are considered classified assets will be the fair market value or gross selling price, whichever is higher. So there are 1, 2, 3, 4 kinds of donors. The first group is composed of the resident citizen, non-resident citizen, and resident alien, and they are taxable on all properties donated within and without the Philippines. The second one is the non-resident alien. Okay, and they are subject to the donor's tax only on their donation of properties located in the Philippines, but subject to the rule on reciprocity, which will be discussed in the succeeding slides. The third group is composed of the domestic corporation and resident foreign corporation. These corporations are taxable on their properties donated within and without the Philippines. And the fourth donor is the non-resident foreign corporation, and they are subject to tax only on their donations of properties located in the Philippines. And take note, class, for non-resident foreign corporation, reciprocity is not applicable. Take note, reciprocity applies only on the non-resident alien individual, not a corporation. So what is the reciprocity rule? Reciprocity rule means that if a non-resident alien is a citizen of a foreign country that does not impose donor's tax on the intangible properties of Filipinos, then in the same manner they are also not subject to donor's tax on their intangible personal properties located in the Philippines. Take note, class, that the reciprocity rule is applicable only on intangible personal properties. This does not apply to real properties. This does not apply to tangible personal properties. So reciprocity, take note, applies only to the non-resident alien individual and only on his intangible personal property located in the Philippines. So what are those intangible properties deemed located in the Philippines? Take note, intangible properties cannot be seen. So how do we know that it is located in the Philippines? If, for example, it is a franchise exercised in the Philippines, then it is deemed located in the Philippines. SOB, shares, obligation, or bonds issued by a corporation or sociedad anonima organized or constituted in the Philippines in accordance with Philippine laws are considered located in the Philippines. SOB, shares, obligation, or bonds issued by foreign corporation, 85% of each business is located in the Philippines. Then they are considered intangible properties deemed located in the Philippines. SOB again, shares, obligation, or bonds issued by any foreign corporation. If such SOB, shares, obligation, or bonds have acquired a business situs in the Philippines, then they are considered located in the Philippines. Last one are those shares or rights in any partnership, business, or industry established in the Philippines. So, reciprocity will only apply to a resident alien individual on his intangible properties, which may be any of these enumerated intangible properties. So, what is the formula in computing the donor's tax? You have to start with the gross gifts. Gross gifts is the amount of the donation, less deductions allowed by law, and therefore you will get the net taxable gift. This will be your tax base on which the tax rate will be imposed, and multiplying it with the current donor's tax rate of 6% under the train law, 6%, then you will come up with the donor's tax due. Then you can deduct any tax credits if you have any, and the remaining balance will be your donor's tax payable. And under the train law, the first 250,000 pesos net gifts is exempt under the train law. So therefore, the excess of 250,000 will be subjected to the donor's tax. So what are not included in the gross gifts and therefore exempted from donor's tax? In the case of resident citizen, non-resident citizen, and resident alien, dowry made on account of marriage and before its celebration is exempted or not included in the gross gifts. Meaning, if you are a parent and you are either a resident citizen, a non-resident citizen, or a resident alien, and then you give a gift to your son or daughter because of marriage, that is considered a dowry, and it is required that it must be given before the celebration of the marriage. Okay. Allowable amount is up to 10,000 only per parent per child. So if both spouses, husband and wife, gave gifts, then they are entitled individually to the maximum amount of 10,000 per parent per child. So gifts, these kinds of gifts, dowry, are not included in the gross gifts, only up to the amount of 10,000. In excess of that, you have to include it in the gross gifts. However, under the train law, this has already been removed. But you have to take note that under donor's tax, what will prevail is the law, the law that is effective during the donation of the property. So if the property is donated before the train law, then dowry can be claimed. Gifts made to or for the use of national government or any entity created by any of its agencies which are not conducted for profit or any political subdivision of the government shall also not be included in the gross gifts. So if you are as a resident citizen, non-resident citizen, or resident alien who give gifts to the government, those gifts are not included in the gross gifts or are exempted from donor's tax. Another one is if you are a resident citizen, non-resident citizen, resident alien who give gifts in favor of an educational, that is a school, or a charitable, religious, cultural, social welfare corporation, institution, accredited NGOs, trust or philanthropic organization or research institution or organization, then your donations or gifts to these entities are exempted and are not included in the gross gifts. And there is a requirement that the donee, itong mga institution na ito, they should use the gifts for their individual purposes and not for administration. It is required that 30% of the gift, not more than 30% of the gift must be used for administration purposes. Meaning, huwag gamitin pang sweldo yung binigay na gift. Gamitin dapat sa purpose ng ng institution. So if more than 30% of the gifts given by the donor is used for administration purposes, then it will not be exempted. For a resident alien, the same rules apply with that of the RC and RA and NRC. Only that a non-resident alien is not allowed to deduct dowry. And there are donations exempted by law. Donations to the IBP, the International Rice Research Institute, the Philippine Red Cross, Ramon Magsaysay Award Foundation, UP, Philippine Normal University, Development Academy of the Philippines, Girl Scout of the Philippines, Boy Scout of the Philippines, NCAA, or the National Commission for Culture and the Arts. Any donations to these entities are exempted from donor's tax. Valuation of gross gifts. Anong amount ang i-include natin sa computation ng gross gifts? You have to take note that the valuation of the gifts is based on their fair market value at the time of donation. Take note, time of donation. So if you bought something 10 years ago for 10,000 and you donate it today, and the value of that property has already increased to 50,000, then what will be included in the gross gift is the current fair market value of 50,000, not the acquisition cost. So what is the value of that gift at the time of donation will be included in the gross gifts. So what are the deductions from the gross gifts? Encumbrance assumed by the donee, like unpaid mortgage assumed by the donee. For example, a house and lot is donated to you, but that house and lot has an unpaid mortgage. Then that unpaid mortgage is assumed by the donee. Then it can be deducted as the allowable deduction from the gross gifts. Just remember that the property donated must be included in the gross gifts before you can deduct the unpaid mortgage assumed by the donee. Or any diminutions given by the donor upon his specific instruction is also deducted from the gross gifts. For example, you are given as a gift an amount of 10,000 pesos with the instruction from the donor that you have to give 10,000 to your best friend. Then you have to include the entire amount sa gross gift. Then you deduct that diminution given to your best friend as instructed by the donor. Tax credit on donor's tax. It is allowed to minimize the effect of international double taxation. This is applicable if you are a taxpayer of donor's tax and you have donations outside of the Philippines that is subject to donor's tax in the other countries. The question now is, will you be allowed to deduct those that were paid to the other countries in your donor's tax in the Philippines? The answer is yes, but not the entire amount. There are two limitations in the computation of tax credit. I do not advise that you memorize them. But the limitation, one or the first limitation, will only apply if there is only one country involved. So if you have several donations, donations within and without the Philippines, those donor's tax paid outside of the country can be deducted as tax credit in your donor's tax in the Philippines, but only prorated on the net taxable gift of the foreign country involved. So only up to that prorated rate allowed for one country. While limitation 2 will only apply if there are multiple countries, then you have to prorate. You get the ratio of those that the donation you have given in the foreign countries, and that the amount involved will be limited only to that portion. You can only deduct that portion, not the entire amount. So donors tax administration, siyempre, pan the word donors, the taxpayer is the donor, not the donee. So the donor must file his tax return within 30 days after the gift is made. And then the pay as you file system is also observed here. As the donor files his return, he must pay the donor's tax. Therefore, for non-resident donors, they can file their donor's tax return with the Philippine Embassy or Consulate, or directly with the Office of the Commissioner of Internal Revenue if they are able to come to the Philippines. So that is the donor's tax topics which I believe needs to be emphasized.